Hi, welcome to the Market Alert for Thursday, the 18th of February 2021. So, top banker at JP Morgan tells clients to forget about bubbles and just buy everything. Of course they will, because they want somebody to offload all of their shares to, having ridden the bubble from 2009 when QE1 came into force. Ride the rally, drown out warnings that the market has become overheated. Yes, drown out and ignore any warnings that the market is seriously overvalued. So anyway, we'll see. It's certainly looking at the moment as though it's struggling, and the implied volatility increasing again yesterday from 1626 to 1647. So we're starting to move back to the upside here, but at the moment still showing green, which means that the market is still free to move to the upside, but it's starting to look a bit precarious, as can be seen here in the Dow. Yesterday the market moving lower before returning it back to the upside there. And if we just apply some fibs, you'll see that the market's currently trading at the 78.89 area, which you can see. Then I'll just remove the 78 there, so you can see prices are now in a crucial area. They need to close above this 89 to move higher, and if they do, then we go on to make and break the all-time high. But at the moment, there's something quite odd about the market. It's desperate to move down, and they keep bringing it back. There's certainly no news to move it to the upside until Yellen and Congress announce the 1.9 trillion, but you can see yesterday how they brought the market back here. And the DAX actually looking a lot weaker, as can be seen here. Yesterday we had selling in the DAX as the prices moved down to the fib retracement here of 78, which was drawn from this low to this high, and we've got that 89 here, which I've just drawn on the Dow, is where the market comes back, fails, and then starts to move lower, and that's what we're seeing there. So a close below 78 takes you through the 20 bar moving average, then down to the 89, and then we're back to that 62 area that we saw before, where the market had found support from this low to this high. So again, quite a support area here, and also here should prices move lower and take out yesterday's low, which we'll look at now. So overnight prices have traded below the daily pivots. They've come back to look at the daily pivots. Eventually they broke through the 200 MA, traded down, found a bit of support, which you can see here, and moved back to the 200 and back to the close. But once prices got back through the 200, again you can see the selling there in this bar. Prices then moved sharply to the downside by 30 odd points, back to the 20 bar moving average, where it closes back below again with more selling. Prices then try to be supported here, but fail and move higher. I mean, you can see the support here as well, as they brought prices back, all of the green bars there, but failed once prices closed back below the 20 bar. Found some support in this area here, which is going to be the 13,900 level, and again you can see buying back here, profit taking here, prices sideways to higher, back towards the 200 MA, and again once we close back below the 20 bar moving average, we see an increase in volume. Prices move lower, and then you get this really high volume bar, the highest bar that they've had on the overnight, and you see prices being brought back to the 200 MA. So at the moment it's going to be interesting, because the daily chart is dictating what's going on here, and like I say, these are the areas that you want to watch out for. But in order to move lower, prices need to take out yesterday's low. Then you've got the S1, and then down to this big round number here. So on the upside, if we just compress the chart a bit, you will see that we've got the DP and the close to take out first on the upside, then the big round number, and then up to the previous day's high, which is over 100 points away at this point in recording. And the same on the downside, really, down to the S2, which will take you down to 13,784. 13,784 takes you down to 784, takes you down below the 62 there, so you'd have to go below the 62 and there, which is will be a hard sell to do that. It would have to drive through in order to take this level out. So that's the overnight and what we can expect for today. So let's have a look at yesterday's session. And as I finished recording yesterday, they released the CPI figures in the futures market, and you can see that inflation was up slightly. I mean, they've been lying about these figures for years. We know when you go to the supermarkets that if you compare prices from this time last year, food prices have gone up by more than 1.4%. That's for sure. It's more likely to be 10 or 15%, if not more. So again, this is just a manipulation of the data to make it look as if they've got inflation in check. And it depends what you put in the basket to calculate it. At one point, we had disposable cameras, which of course nobody's really buying, and they certainly won't be now. I mean, it was a wedding feature, really. They were put on tables for people to take photographs of one another, but with all mobile phones having cameras on now, it's amazing, isn't it? And lip gloss was another one that was in the calculation as well. So, you know, this is how they do this sort of stuff and manipulate the perception of the masses with these phony statistics. So we had the CPI, the market moved higher, and then it moved to the downside, which you'll see there. Prices coming back and having a look to see where the market is currently trading. It was above the 38 and having come off the low of the 50%, which we looked at in the pre-market yesterday. So prices opened and they shot down to the low. The low is very important. If you break the low, you head south. As I said yesterday, if we would do this, we would move down towards 100 points, and that's exactly what we did as we went down to the S1. You can see there the buying pressure now starting to come into the market, and prices stopping there. And immediately we are taken down. That 100 points takes us down to the 62% retracement from this low to this high. So at this area you would expect to find support, and that's precisely what we did find here. We get a double bottom test there, and then they bring the market back here. You can see how they drove prices off the low there. We've got this double bottom, just do that again, off here and here, and prices are immediately brought back. That's how it works. So there's the 62 again. You can see prices coming off that 52, and here's the market sitting at 47. So you can see again how important looking at the daily chart is. If you want to take profits at these major areas, then they're well worth noting and keeping an eye on. So prices come back, but then they're hit by a bit more profit taking, as you'll see here. So prices trade to the 62% retracement, and in order to get through here, you need to see prices driving higher, and they managed to do this and trade up to the 78 and also the low. And if they can't get through the low, then this is another area where you're likely to see prices struggle. And you can see this here with two lots of potential weakness there, and then prices trade sideways and once more have another go, trade up to the 200 MA, one more go as we push through to the close, and then prices struggle at this area and start to move back to the downside there. And then we have a potential sell signal. This is filled as prices come down to the S1, managed to get through the S1 and then back down to the 62% retracement. We know this is the 62% retracement from earlier, and again you see them testing the market here when they get prices down to this level. The test fails. They say, well, let's see if we can get it down to the S2. They managed to achieve this, and then you can see this big spike in volume as the shorts take profits at this area, and then the volume drops off and prices start to bounce back, which you can see there, and then just drift sideways and come back and have another look at the S2. Got retracement there down to this level of 78. That's from here, marked from here, so up and back 78, and then stuck at 89 there as we get towards the end of the morning session there. And then prices trading in a sideways range. So at lunchtime we had the US retail sales. These came out massively higher than before, and they're attributing this increase to January buying by consumers. And you think this was really good news for the markets, and yet again prices failed to move higher as we speed through the hour before the cash market opened. You can see how prices were brought back, and again that 62% retracement in the daily chart there is now broken. We know it is because it was down at the BRN and the S2 prices. Then you can see how they tried to hold them here, and then it's immediately hit with selling, and then prices managed to hold and move back to the upside there. To reload the charts, if you notice, there was a bit of strange price action here. That wasn't right. Disconnected from the MT4 server, so I want it as accurate as possible. So that's why you just see that flashing there. And immediately, as soon as I reload, I can see that they were buying back in here. And of course, we get the follow through to the upside, up towards the 200 MA, and then an 89% retracement through there, and then a further 89, which is drawn off the high over here down to this low, and the market stopping at the 14, just under the 14,000 at the 89% there. And then prices struggle at the S1, close back below the 200 MA and start to move down, but find a bit more support. We're starting to trade sideways, and then they move back sharply, and then we get a potential sell signal. And it's a shame we didn't get this a bit earlier, because what's going on here is that the entry point is just at the 78%. You can see there, got that 78 and the entry price there. So I know this is going to be an issue, and we could see some buying coming into the market. And if so, we can always get out and then get back in. And immediately you see them testing. The volume in this bar is 90% of the previous bar. Doesn't want to go down, and decide, okay, I'll come back and see what this does. And immediately the market reverses and trades up to 78% of this high to this low, which was a good move to get out at this point. But the sideways move wasn't over. Again, you can see them coming off the 62%. It went below it. It headed towards that 50% from the major low to high, which you can't see there. And this is why it's important to have these levels. So now the market reverses, and I've drawn the fibs in on the downside, and prices then drift down to 62, come back, and then this time we've got to close above the 200 MA there, and the 62 again. And on this occasion, it was just a straight reversal off this trade. And then we had another short. So prices moved lower. I just want to go back to this straight reversal. There are occasions when this happens, you don't get a chance to even do any analysis, because the market will reverse off. Unlike here, where we could see what they were doing. On this occasion, it was just that hit it straight off that 200 MA and brought it back, and you can see they were selling. So if they're going to sell, you're going to hope that they're going to continue with this to the downside, and that's what they do. We're in a really precarious area here as well, because we're at 89% from this low to this high. So again, we could expect the market to find some support here. But if we could break it, the market certainly didn't want to go up. I mean, each time that it had tried to move to the upside, it had failed. I mean, this was a big move to come back. It was 78% retracement, and yet the market failed. So it's already telling me, and again from here, from this low to this high, again this brings us to that sort of 78% area, and we've got the 200 MA. So I'm looking at it and thinking, well, it doesn't want to go up, and it's just a matter of waiting to see and get the stop to break even if possible, that prices will move lower. And again, they're starting to buy back in at this area, and then prices move to the downside a bit, and then again you can see them starting to buy in here, and we've got that 89 from this low to this high. So again, we're going to find some support here, and prices start to do this, but then the selling comes back in, although this is some form of buying pressure as well, because the volume is greater in this bar than the bar before it, and the range is far less in this selling bar. So there is a bit of buying pressure here, and also we've got this double bottom here that we'll need to take out. And again, you can see prices sitting on this. They come back sharply. The break even is still fine at this point, but this was quite alarming watching this happening again. So again, I'm warned that there is support at the 20 level there, and decide to take the money off the table purely and simply because this is the highest volume bar we've seen all afternoon in this market. So let's fast forward on. You can see them immediately taking profits there. The weakness then comes back, and prices trading sideways. And if we just move on, we had a potential buy signal here, which the market doesn't fill. And then we have another sell signal, and now we know we've got a problem here because this is a genuine double bottom. We've also got an 89% here as well, but if we can see the market again doesn't want to go up. We've got these lower highs all afternoon, and then immediately we are taken into this trade. It bounces back off this level, but then we get the selling, which is what we want to see. So now we've got a triple bottom here, but prices eventually break and get to break even, and you'll see prices eventually getting to the BRN. We're now heading towards 430, where the spreads start to change, and calling it today at the BRN there, and just exit the trade, where you can see then prices start to trade sideways. So yeah, busy day yesterday. The volatility certainly picking up, which is great news, and let's hope that this continues today. Okay, that will do it for this one. As ever, thanks for watching. See you in the next one.